All right. Hi, Hakim. Welcome to Meet the Founders Coinscrum series. My name is Yatu Yoga. I'm an anthropologist working in the crypto space. So you've been involved in the crypto space for a while now. So before we start talking about your project, Thresh0ld, um, I think it would be interesting to say how you've arrived from the crypto space, what experiences you've accumulated along the way.
Of course. Hi, Yatu. It's a real pleasure to meet you, and it's a pleasure to be on Meet the Founders. Hi, everyone. So my background is in tech. I learned coding when I was 15, a few decades ago. I studied mathematics, physics, statistics, probabilities, economics, and as you probably heard in my accent, that was in France. But my working life started in the UK, working in the city of London, working for banks. So I worked for several banks, investment banks, doing tech for the front office. And I also worked for a central bank that was in Luxembourg in the early 2000s, also doing software development. I came to learn about Bitcoin and blockchain back in 2012. Actually, when I first heard of Bitcoin was in late 2011, but I had no time to really look into it. It sounded weird and wonderful in 2011, but in 2012, I did look more closely into it and realized that there was quite an amazing paradigm in technology that was being introduced to the world. Very exciting, with a background in both the financial world and in technology. It hit me as something quite spectacular. So I started working in the industry in 2013. At the time I was in China, but I came back to the UK for this purpose. And I first began starting a Bitcoin startup incubator with a friend, Eddie Travia. This was in 2013. And we helped fund startups that were doing Bitcoin projects. A bit later, we took this company on the stock market in the UK as Consilium. And over the years, I've had the pleasure to meet people from the community all around the world, in the UK, in Europe, in Asia, in the US, in Australia. Really, it's been quite a fantastic journey to meet all the great talents that are building on top of now more than just the Bitcoin blockchain, so many different blockchain. So much has been done, it's quite breathtaking. And today I'm helping companies with the big problem that many have faced since 2009, and that's the problem of private key management. And obviously how many companies have had some assets stolen when hackers have managed to take over their private key. And that's what today Thresh0ld is about, helping solve this issue.
Okay, thanks for that. And can you say a little bit about, private key management? So what's the scale of the problem that we're talking about here? What's the current problem that you're addressing in this kind of landscape?
Of course, yeah. So, if a company needs to have a wallet online so that they can perform transactions when they need to be performed without wasting time, then the issue that companies have seen over the last decade is the wallet needs to have a private key, which is connected to, which is on the server connected to the internet. And hackers have found many different ways to get their hands on those private keys. And that has led to the theft of assets. But also we've seen other issues with private keys, issues where sometimes the loss of a private key, not necessarily the theft of a private key, can also cause large damages to exchanges and their customers. And, Quadriga, for example, in Canada comes to mind. When there is only one person that has access to a private key that is needed to unlock the transactions, and that person becomes unavailable. In the case of Quadriga, the CEO died, then the funds were suddenly no longer available. So the issue of private keys is an issue of how can you adequately manage your wallets without running the risk of either someone stealing the private key because the wallet is online, or if the wallet is, say a multi-sig wallet, which is not necessarily online, losing access to your private key and losing access to your funds.
Okay, so how are you? How is Thresh0ld kind of interacting with this problem?
So Thresh0ld uses Thresh0ld cryptography. That's where the name comes from. Mm-hmm. Thresh0ld cryptography. And Thresh0ld cryptography was introduced in the 1980s, so quite some time ago, by mathematicians who back then were also facing the issue of private key management. So this issue is not something that is unique and new to the blockchain ecosystem. It's an issue that anyone who has to deal with private keys, with cryptographic keys, whether those keys are used to sign data or encrypt data or decrypt data, the problem is the same, especially in the context of a business. How do you make sure that the cryptographic keys that are needed for your business do not suffer, being destroyed or being taken over? So the mathematicians thought of a new way of doing cryptography, where instead of relying on one party who would be in charge of holding onto the private key and managing that key, the idea was let's work on multiple party where none of them need to have the private key, nor any portion of the private key. Instead, multi-party computation and Thresh0ld cryptography relies on a mechanism where the parties that are involved in the computation generate some cryptographic material, which is not the private key or a portion of the private key. It's cryptographic material that is sufficient so that in combination with the others and without the need to share this cryptographic material with the other parties that are computing, they are capable of signing data or encrypting data or decrypting data. So in the 80s, the mathematician came up with the theory. The theory stayed theory for quite some time until 2008, where a team in Denmark, now known as CPIO, cracked the implementation and turned the theory into applied mathematics. Mm-hmm. And the same team in 2018 brought this to the world of blockchain technology. And so what our platform is built on is this very technology, where we have multiple parties, and obviously in the context of business, our platform is a B2B platform. Mm-hmm. And the parties that compute are the customers, ourselves, and cybersecurity partner as well. So we are in a position now to offer to businesses a keyless wallet infrastructure where there are no private keys to be found anywhere on the infrastructure. It's not on the it's not with the multi-party computation nodes. It's really nowhere to be found. It's not on a laptop or a mobile phone. There is no private key in the whole infrastructure. So that changes completely the paradigm of security, because now you are in a position where you can have wallets online that are in a position to send transaction when need be without delay, and without that same risk of potentially someone snooping around and getting their hands on the very precious private key that controls the funds.
That's interesting. Way to approach the the private key and security and just ease of use kind of problem, not having to rely on this kind of one thing. So who are the others kind of working on this kind of project within the space since like 2018, when this kind of technology has come into the space? Or are you the only guys kind of working on it at the moment? Or
there are several companies that are using now multi-party computation. For B2C, for consumers, you may have heard of maybe the Zengo wallets. Mm-hmm. Zengo has a very slick wallet that also leverages Thresh0ld cryptography and multi-party computation, so that consumers can benefit as well from such technology. And so you can have your wallet on your mobile phone, but losing your mobile phone doesn't mean losing your private keys, because again, your wallet is now just a party in the computation, and so there are no private keys on that mobile phone. There are other companies that are leveraging this for businesses as well. This is nascent. What we've seen so far is the very large companies have adopted the technology. So, for example, in Japan, SoftBank launched an exchange, and they built their exchange from the ground up, and they use Thresh0ld cryptography at the base layer of their security. And obviously, in Japan, things are more regulated, and a company like SoftBank cannot afford to be losing access to their funds or their customers' funds. And so they've deployed the technology. So this technology has been deployed by very large players. Also, institutional players are now using this technology. A lot of large OTC desks are using this technology. But it had been maybe a bit cost prohibitive for smaller companies to be able to afford that. And even for enterprise, small and medium enterprise, it was a bit cost prohibitive, and also the knowledge needed in order to actually deploy this technology. You need a strong engineering team, and sometimes SMEs don't necessarily have this the talent pool in house. And so what we've done is we've put together an infrastructure that enables small and large enterprise to leverage the technology without the prohibitive costs that we had seen so far.
Okay, that was a good explanation for someone. I think I understood that, which is good from someone from a non-technical background. Okay, so right, so has your kind of technology, so has it been used? Can you give some use cases of how it's been kind of used at the moment?
Well, in our setup, so most of our customers are exchanges, and so they're using our technology to replace what they traditionally had known as hot and cold wallet. The system is neither hot nor cold in the sense that there are no private keys, and it's always online. So it's kind of again, because of the paradigm shifts, these notions of hot and cold do not really apply. And the way that exchanges are using this, the service, is essentially they are in a position where they are able to have wallets so that they can receive deposits from their customers, collect those deposits into other wallets. And obviously all of those are constantly online, so that deposit can be taking place 24/7, 365. And then on the other side as well, they are using wallets that are able as well to send large amounts of payments so that they can fulfill the withdrawals that their customers wish to do on the exchange in a really efficient way. Now, there are many different ways of using the technology. What we have is an enterprise solution that can work for an exchange, that can work for a payment processor, that can work for a foundation, that can work for any company that handles assets, crypto assets, and need a bit more structure in a sense where the platform is built with policies where you can have a good segregation of roles and duties, where you have some people in charge of creating wallets, others in charge of operating those wallets, i.e. requesting transactions, others approving or rejecting the transactions, and also auditors so that they can internally track everything that is going on with the authorization of transactions. Now, the way that it can be used are many different ways in the world of business. In the world of in the consumer world, again, it's a matter of if people were relying on wallets on a mobile phone, and those wallets had a private key stored on the mobile phone, any loss of the mobile phone or destruction of the mobile phone in the past would have meant losing their phone. So with solutions like Zengo, for example, you are now in a position where you can have your wallet on your mobile phone, but losing that phone doesn't have that catastrophic results that it once had.
I think I remember seeing you at a crypto conference, and you were talking about your customers, Trade0ld, I hope I pronounced that right, and Busher as well. And how they managed to kind of, and I think you gave them as good case studies in how they managed to cut down costs and mining fees
Yes.
in their kind of transactions. So can you talk a little bit about how they managed to do that as well?
Absolutely, absolutely. So Trade4ld is a good example. They're an exchange in Nigeria, and they were using multi-signature technology to secure their exchange funds, their operations. Now, multi-signature technology has many advantages, but it also has several disadvantages. And some of those are related to the fact that because you have multiple signatures that need to be added on top of the transaction data, then naturally the size of the transaction, including the signatures, is much larger than your regular transactions with a single signature. So, well, in terms of averages, it's on average a multi-signature transaction is about 20 to 60% larger in size than a regular transaction, a single signature transaction. And so, obviously, because of that, miners tend to charge more to include these transactions in the block. Obviously, in the Bitcoin blockchain, the blocks are limited to megabytes, so miners need to have as many transactions as they can. And so, what you end up seeing is when exchanges use multi-signature to secure their transaction, and they are doing many transactions in a day, this additional 20 to 60% in size translates to 20 to 63% more in mining fees. So switching over to multi-party computation meant that because multi-party computation generates a single signature,
Mm-hmm.
the exchange was able to save immediately around 50%. They were able to change within 3 months of activity, savings 50% on their mining fees alone. Now, the single signature is a great advantage, and at the same time, the policies that I've described earlier do enable companies to also have multi-level, multi-person approval. So M of N, where M person are supposed to approve on each level of transaction. That is achievable on multi-party computation, but it doesn't add any data in terms of additional signature in the transaction. So that's one way that Trade4ld and some of our other customers were able to save 50% and over. Mm-hmm. Another customer has gone beyond 50%. They were able to save 70% in mining fees compared to their multi-sig setup, because above and beyond having a single signature as the output of the multi-party computation, the platform is also built to give the ability to fine-tune the mining fees that an exchange would want to pay. So they can specify in terms of Satoshi per byte exactly how much they want to pay to the miners. They can also group for the Bitcoin blockchain up to 650 UTXO, so that's unspent transaction outputs, and that also drives their cost down. So by combining the different features of the platform, Busha, which is this other exchange also in Nigeria, was able to save 70% in terms of mining fees as well.
That's interesting, and they were kind of small to medium kind of exchanges, right?
Yeah. Indeed.
Okay. That's interesting. So I think both those exchanges were in Africa, right? So in the continent. So I think so you're from an African background as well, right? Am I right?
Yeah.
Okay. Okay.
Yeah, absolutely. The accent is French, but my family is from Algeria. Hence the name Hakim. So yeah, absolutely. My family is from Africa. Our CEO as well has family in Nigeria. Our CIO has family in South Africa. So several of us are from the African diaspora, and we wanted to also help, obviously the growing ecosystem in Africa so that they are able to benefit from the security of multi-party computation at much lower cost than what the market was offering before. So we are focused very much on EMEA, and we have many customers in Africa indeed.
Yeah, that's interesting because, one of the crypto discourses that happen is in relation to Africa, I guess, right? Providing financial services for the unbanked and kind of thinking through that conversation. And it's interesting, it's great that you're from that kind of background as well, and many of the people on your team seem to be as well. So it's kind of good that it seems to me it happening that way as well. Can you say maybe a little bit just about what that kind of space is like now at the moment, cryptocurrency in Africa? I think you got Ian Griggs on your team as well, I saw, from Chama Pesa,
Yes.
which is also an interesting project using kind of uh, saving systems embedded within the community and kind of using that within the block. So doing it from the ground up, which is also interesting as well. So you've got, you've got an interesting team as well. Quite an interesting, diverse, like good team. Actually, can you maybe talk a little bit about your team that's involved in your project?
Yeah, I mean, I'll start with the first question in terms of Africa. So absolutely, I can give you a bit of insight as to what we're seeing in Africa. So in several countries in Africa, and Nigeria, Kenya, South Africa are amongst the top countries where we see the most activity. But we're seeing activities all across the continent. So in essence, when it comes to blockchain and cryptocurrencies, the African continent has learned to leverage the benefit of the technology for different purposes. One of the first purpose was remittances. And so you probably remember BitPesa has been doing this for some time over in Kenya, and they've been doing a great job at helping, bring the cost of remittances lower and also the speed of remittances faster by leveraging this kind of technology. And this continues. Obviously, the African continent does receive large amount of remittances from various countries. From the UK, that's absolutely a fact, from several of the diaspora members, but also, France has huge remittances going into Africa, and several other countries in Europe. So for the population of Africa, being able to get the remittances at a better cost and faster has been fantastic. And so that's why, for some time now, they've been using and leveraging that technology. I mean, obviously, it hasn't gone completely mainstream, but it is certainly getting there in a sense. And we're seeing that it's not just the remittances aspect that interests the African continent. There's also the aspect of currency debasement and inflation, which is a problem in many countries. You probably have heard of this over the years, where suddenly the inflation turns into hyperinflation, and the value of what you have goes down at a rapid speed, and people have learned to protect themselves. And so obviously, traditionally, people have known to use assets like gold, and that's true across the world. But Bitcoin and other cryptocurrencies have also been a mechanism that some in Africa have chosen to try and protect their wealth against inflation. And that's something that keeps going on now. There are many, many, many projects in Africa leveraging many different blockchains. So yes, the Bitcoin blockchain is one of them. We've seen many people using the Stellar blockchain as well. We've seen people using really a broad range of blockchain for different use cases. And the community of developers is really growing as well. And so there are a lot of developers now in Africa that are looking to build and create their own services. The fintech ecosystem in Africa is also growing and exploding. There are some fantastic companies, fintech unicorns in Africa as well. And so there is great hope that the continent will leapfrog, in a sense, technologies by going straight into the world of blockchain, and some of them are going into the world of decentralized finance as well. So at the end of the day, this may be very beneficial, the same way that the African nations didn't need to set up the same phone infrastructure as what some of the Western countries have had for decades, but instead just leapfrogged all of that and went straight to mobile. Mm-hmm. So that was very, very beneficial. Now, maybe we're seeing as well the same phenomenon happening with blockchain and cryptocurrencies. Many banks as well in Africa are looking at it, including central banks. And I suspect that over the coming years, we're going to see more and more activity going out of Africa. So yeah, our team is diverse. Again, our CEO has background in law. She has family from Nigeria. She's herself from the Caribbean. Our CIO has, again, she comes from South Africa. She's been working in the financial industry for decades. It's a very diverse team indeed.
Yeah.
But without trying, that's just the way. That's just the way. I mean, London is a fantastic place for building very diverse teams, and so I guess it just happened naturally. Diverse in terms of where people come from. We have a good mix between men and women as well on the team, but we didn't try to achieve that. It was just kind of a natural thing.
Yeah, I mean that's great. I think it's one of the most diverse teams I've seen. So that's great that you managed to do that without trying as well. So surely means that you're getting something.
It's London.
Yeah.
I put it all in the hands of London for being such a great city.
Okay, cool. So you kind of answered this, I think, maybe, but just to think about what kind of, there's people building technology from Africa now as well, rather than like maybe things coming from the external coming to Africa. Like what kind of projects are kind of resonating within the continent? Like what kind of ideas and projects do you think are?
Oh, it's really diverse. So I can tell you some examples. So micro lending, obviously that's one that's is popular. People are looking at micro lending and how you can leverage blockchain for micro lending. You're looking as well at projects that are obviously there's the classic exchanges converting crypto and fiat. There are also some projects that are leveraging different blockchains to issue stable coins. So we've seen now some African stable coins being issued with blockchain. The DeFi space seems to be of a great interest for many Africans, but I mean, this is broader, I would say. Obviously, in many countries, DeFi has been the buzzword over the last few months. We're seeing projects where also they're looking at tokenization of real world assets, whether the real world assets are real estate based or minerals, say like digitization of, say, gold, for example. Africa is an extremely rich continent in terms of resources. They literally have everything over there in terms of mineral and all the other resources. And so different countries have obviously different type of resources, but people are looking at digitization of different type of resources, using blockchain technologies. It's as diverse as what we're seeing in Europe, in a sense. So there are people looking at every different aspect of how they can leverage the technology to try and improve the industry that they're working on, and also a lot of younger entrepreneurs that are technologists that are learning and are just experimenting and seeing what sticks as well. So very similar to what we're seeing in the West. Tons of creativity going in all directions and looking at all the different. I sense a lot of them being agnostic. It's whatever blockchain does the job is the right blockchain. So if the job is we need, say for example, to do micro transactions, then they're looking at, say, the Stellar blockchain for doing micro transactions. So it's
Right, it's nice that it's agnostic rather than being committed to like one project, right? Bitcoin, rather than being a Bitcoin maximalist or kind of really committed to Ethereum. It's kind of whatever works best for the situation is the
yes. I mean, in Africa, in French, we have the word système D. Système D, D for the letter D, and D in French means débrouillard, which in English translates to someone who will be able to get a problem sorted, whatever it takes, using whatever most of the time is the brain, right? So, what needs to be done, whatever tools you have at your disposal right now, is it possible to use what you have around you right now to fix the problem that you're looking at? And that's a great way of experimentation, I think. So it was something that has been in the culture forever, but now it's applied in high tech in a sense. So that's why you don't have necessarily people who are married to a blockchain in particular.
Yeah. No, I find that really interesting, actually, just how that kind of cultural value translates into this kind of tech kind of world as well. Okay, so kind of just wanted to ask about, just moving on from that. You've been in the space for a while now, coming from kind of a more kind of a professional kind of background in kind of the legacy world of like finance, per se, maybe. And so what cultural shifts have you seen along the way since you started your journey in 2012-13? Like, what important cultural shifts have you seen in the crypto world since then?
In the crypto world, I'd say maybe I'll talk about the cultural shifts that I have seen in the world related to what crypto has brought, in a sense. Mm-hmm. So, in 2008, we saw a lot of people who maybe were not very familiar with the world of finance, the world of monetary matters, suddenly become extremely interested in learning about finance and monetary matters and understanding the financial crisis and why and how, and is that going to happen again? And so the emergence of blockchain around exactly the same time has brought a better understanding for a lot of people as to what money is and how it works, and how it is possible now with blockchain technology to have peer-to-peer value transfers, which can essentially shield you from a banking collapse. Because the essence of the banking crisis was, if all the banks were to collapse, then there would be no way to transact on a day-to-day basis. So you go to the shop, you try to use your debit cards, it's not working if none of the banks are online. And obviously, the peer-to-peer aspect of blockchain technology has changed that, but also has changed the paradigm of ownership of assets, in terms of if you have your private key, if you have a wallet which uses private key, if you control your assets, it's not the same as if you don't. And so there's been a lot of learning for many people as to what the big difference now is between having your asset on a blockchain or having your assets with the traditional system. That's continuing as well. Obviously, the current crisis that we've been going into over the last few months is making everything more fragile in the legacy system. And so people are obviously aware that 2008 is not that far away. Can blockchain provide a solution? I hope so, personally. But people are. I think a lot of people are counting on that, in a sense. So we're seeing not just regular individuals going towards blockchain technology, as you have seen now. We have had big announcements of large companies looking at crypto assets in a very different way, in terms of how they can actually place some of their wealth by buying some bitcoins. Several companies have done that over the last couple of months, and also we've seen things on an international level where now blockchain is being used to settle payments between Iran and other countries, so as to not cause issues with the sanctions. So since 2008, things have gone, just a complete J-curve in terms of use cases of the technology and who is using the technology for what. So from retail investors who were just speculating on the price of Bitcoin to people who really believe in the technology and have purchased various cryptos because they want to help the project and they want to invest in those projects because they believe in what they're doing, to companies that want to protect some of their wealth that are now buying Bitcoin to try and preserve some of that wealth in the coming years, to central banks, and that's the Iranian central banks, buying Bitcoins from miners who are doing mining in the mosques of Iran. To Venezuela, who's issuing, remember the petrol that they try to issue as well. So it started with just a few tech people saying, "Oh, I wonder if this project is going to work. Let me put my computer online and do some mining to see if that's going to take off." To now, really large actors using the technology, even now other central banks saying how they want to issue digital currency based on digital ledger technology. So 10 years, we've seen some amazing progression.
I mean, it's kind of mad when you think of it like that, isn't it? That it started out with a few guys in their bedrooms kind of coding and writing something into being, and then 13 years later, it's kind of nation states are kind of using it to trade assets and put their most prized possessions on kind of these kind of blockchains. Well, getting to that stage anyway. Okay.
Absolutely.
Absolutely.
When you see countries using cryptocurrencies to settle their international trades, this is telling you something quite substantial in terms of store of value.
Definitely. I think that's a good note to end on. We're running out of time. So thanks, Hakim, for joining us. And we'll look forward to see what's happens with your Thresh0ld project. I'm sure it'll be great. But we'll keep an eye on it. Okay, great.
Thanks you very much. Thanks for having me.
Bye.